Welcome back. Pradip Shah also joining us this morning to talk about the current context. Pradip, what's looking attractive to you? You've talked about how, perhaps markets at this point, we are seeing certain factors affecting the rally, but fundamentals will take longer to recover. So are you still going with the defensive theme, or are you starting to look for other quality opportunities in the broader markets?
In a volatile market, we had a great low in March and then it's bounced back very smartly. There's always opportunity to make money. So in individual scripts. So the broader market will over time trend with the fundamentals of the economy, which are not very great worldwide, as you can imagine. But individual companies in that are doing very well, and you can even identify by sectors. So we had always thought of IT as a good sector for an investor, and yes, sure, it has shown recently how well it is doing. Similarly, the pharmaceutical sector, especially companies that were catering to Western markets with their branded or generics, or even sometimes branded generics, and they've done very well. And of course, the Indian market has continued to do well in the pharma sector overall, though there has been some decline because of the lockdown. We, of course, see that there are certain sectors which are very badly affected. For instance, the hospitality, the aviation, the media and retail sector and so on. And those will take some time. So overall, the economy will be at a lower level as compared to what pre-COVID levels. And so eventually the overall market will also reflect that. But in the meantime, there is liquidity. And there is, of course, interest rates going down, both in India as well as worldwide, which is driving up the market.
Okay, fair enough. Pradeep, we've been talking about how, earnings as well have actually surprised. They've been pretty much in line or a touch better than estimated as well. What stood out to you, post the numbers that we've seen this time around? Still awaiting a few from the consumption pack, even though most of the larger names have already delivered.
Well, one of the things was that raw material costs went down for most companies quite substantially because demand fell off, so they had availability, and those who had the supply chains intact were not affected. So raw material reduction, even when demand had gone down, helped in improving margins. But will it continue? I wonder. There's a CRISIL study which was released yesterday, if I'm not mistaken, or at least it was reported yesterday. CRISIL did a study of 800 top companies, and they found that for this year, FY 2021, they expect revenues to go down by 15 to 17%, and EBITDA to go down by 25 to 30%. So that's a big drop, and the great thing about this is no one can predict how the economy will do or the individual companies will do. The uncertainty is so great. It depends a lot on the trajectory of the COVID-19 outbreak. If, for instance, it gets controlled with or without the help of antidotes and vaccines, then certainly the economy will bounce back faster. There is some pent-up demand. There will be some. The agricultural sector was very good, so that demand is going to be reflected in the coming season, as it is being already reflected in some sectors. So that will help the economy. But overall, it looks as if the GDP will be at a lower level. ICRA has suggested 9.5% reduction. We saw Germany and the USA report 9.5% and 10.1% reduction in quarter-to-quarter GDP. So we will have similar consequences here. And there's, again, one other CRISIL study which suggested, which they studied 40,000 companies. And they found that 68% of them will have some kind of stress on the payroll. I mean, they will be cutting pay or cutting workforce. So all that will get reflected in demand. So while this bounce back is a kind of relief that it's not worse than it was imagined, and the lockdown is getting lifted, that also helps. We will have to face some reckoning, and I think the banking sector will show some reckoning after this moratorium. What happens? Will people pay back as they were paying earlier, or will there be some change? And government policy, will government allow, for instance, restructuring of loans? Maybe there is a need for something like that to stimulate the economy.
Banks as well. Let's drill down there a little bit more in terms of how you're assessing, current valuations and opportunities. We've also got news this morning with the HDFC Bank announcing its new CEO, someone who's actually been with the bank for 2 decades plus, and the market definitely seeing that positively.
I think, as you mentioned, one of the great uncertainties that was overhanging HDFC Bank got lifted, and that itself is a great relief. And then there is an insider who's been proven, well-established, well-known, well-recognized person. So it's all very positive for the bank. But the environment is not. There is going to be stress in the system because companies will have cash flow issues if demand does not come back to the same level, which is unlikely. Pre-COVID level demand will probably take a year and a half to come back.
Pradip, hi there. Good morning. Wanted to also get in your view as to what kind of opportunity you're sensing within the specialty chemical space, because you had alluded to the fact that India does have some sort of a competitive advantage. There have been a lot of stocks within this space as well that have seen a lot of fervor and activity. Is there still opportunity to buy into names within specialty chemicals?
Well, specialty chemicals have run up quite a bit, as you can see, and very obvious examples are like Deepak Nitrite and so on. But part of that was because of problems related to China. First, there were environmental issues. So if you saw the trend for the last year or Indian companies that were serving global markets with better environmental controls and recognized by the customers as being environmentally friendlier were getting demand. Now, with this little discomfort with China, we are seeing even better opportunity for Indian companies. And some companies built up capacity, some companies position themselves with customers very well. As you saw, Japanese companies are moving out. The government of Japan is giving some incentive for Japanese companies to move out of China, and everyone is trying to reduce their sourcing from China. So India is an inevitable beneficiary. And in India, in the specialty chemical sector, in the pharma sector, etc., we are seeing the benefit of the educated pool of people that we have, which is wonderful, whether organic chemists, inorganic chemists, process engineers, those who can manufacture equipment and so on. And we have a workforce that is skilled. We have got talented, hardworking people also. So the combination of brain power-led people and work-led people is bringing us great benefits in terms of competitive advantage. And this is not just in the specialty chemicals and pharmaceutical sector. We are seeing it in other industries also. Engineering is going to be one other area which is going to see that. And I am very enthused that some companies have taken the lead in research and development. So, for instance, Geo has, look at it, 5G, GeoGlass, GeoMeat, these are world-class products and world products aimed for not just the domestic market, but world markets. We are seeing Apple come into India because obviously there's discomfort with China, but they're coming into India. So these are good signs. Again, they will learn from the Indian experience that yes, there is talent not just at the worker level, but also at the educated designers and so on level. And so that blend will bring out further prospects for Indian companies. I think that blend of talent, educated talent and workforce is going to be a great winner for India.
Given the kind of severe slump and impact on business that we've seen for some sectors, such as retail, hospitality, travel and tourism, aviation, just general consumer discretionary spending has been hit very hard. Do you think that the long-term story is likely to play out and that when things improve, there will be some sort of a V-shaped recovery even for these sectors? Or would you think that it's still a slow grind ahead and therefore it would be a complete avoid when it comes to investors betting on stocks within these spaces?
See, V-shaped recovery is very difficult to foresee. I think for consumption-facing sectors, for instance, movie plexes, restaurants, retail, etc. People have to have the confidence to go out, that they will not fall ill as a consequence of going out and so on. That will take some time to come about. Either we have a good antidote available, if, for instance, hydroxychloroquine and azithromycin work, it would be wonderful. But it's not yet proven, so we don't have an antidote yet. And the vaccine system will take a long time to be widespread across the country. I expect that the availability of vaccines will take till March for Indian users, and then to spread it over the country will take months and months of effort, even if the government is fully behind it. And till that happens, people won't have the confidence to go out and spend as they did pre-COVID times. So I think getting back to that V curve, VV recovery is very difficult to envisage. I expect that it will be a more gradual recovery. I hope there's no W kind of thing that we have a recovery just now and then suddenly there's again spike, lockdowns or discomfort in manufacturing, supply chains disrupted, whatever. And so therefore we see again a decline in growth and decline in economic activity. I hope that doesn't happen. I hope it means more like an L or U-shaped recovery. And I think in my own personal estimation or judgment, if I have to make a bet, I think of it as a U-shaped recovery.
Pradip, always a pleasure chatting with you. Many thanks for joining in and sharing with us your outlook on the markets.